All right, Spencer Sutton here, and I just want to bring you a brief market update, what we're seeing in the market. So the first thing, there's three things I want to point out. Obviously, we have got just this crazy high demand for properties and a low supply, which is keeping house prices up. As a matter of fact, in April of this year, the median home price reached $433,000. I read somewhere recently where a person, 40% of people who own their houses today could not afford them with their salary were they to buy them today. So in other words, they locked in at a lower interest rate, a lower price on that property, but now they're unaffordable. So we know unaffordability is a big issue right now. And so that's one of the things that we're seeing. There's still high demand with low supply, so it's a little bit crazy. That's the first thing. All right, so the second thing we want to talk about is just the high interest rates. Obviously, we can't ignore that. They're hovering around 7%, which kind of goes back to the unaffordability issue that we're having, but also what we're seeing is we're seeing homeowners actually hold on to properties. And so this is causing that low supply. Homeowners are not willing to sell their houses right now, not having a lot of them. And so even in our business, we're getting a lot of calls from people who own their house. Maybe they're moving to another city and they say, hey, I've got an interest rate, I've got 2.5%, 3% interest rate. I am not going to let go of this to then go buy something at 7%. So what they're doing is they're renting their house in their current city, whether that be Atlanta, Dallas, Denver, wherever, and then they're moving to the new city and they're renting something there. So we're starting to see that rental demands going up in all over the country, really. And so this has really been very interesting because these high interest rates are keeping supply low, but we still have a demand for housing. So there's still people out there that want to buy houses. That's also keeping, obviously, the prices of these houses high for the time being. All right, the next thing we want to talk about is just the foreclosure market. And this also contributes to prices remaining high in the market because back in 2008, I was an investor back then, 8, 9, 10. Boy, we had a lot of properties come into the market, flood the market. And so the supply rose, demand had eased. We're not seeing any of that right now. And so it's just a very, very strange time in the market. Here we are, we're in June of 2024. And interest rates are going to play into this whole scenario of what goes on. We don't expect the Fed to lower rates anytime soon. Probably if they do, it's going to be later in the fall. Now, let's just talk about what Evernest is seeing in the market right now. Probably back in 2021 and 22, we were seeing a really steady rise of rental rates and a massive demand for rental houses. So I'm telling you, it was amazing. We were seeing rental houses get rented quick, less than 30 days on the market. There's a high demand. This has normalized now. So what we're seeing is we're just seeing a normalization of the rental market. Just think pre-COVID, it's that type of market for rental houses right now. And so again, we've always said, price your property right, have your property in the best shape possible, and you will get it rented in the right time frame. But that's what we're seeing. That's kind of the market update. Here we are. We're ending May into June of 2024, and we hope that's been helpful. If we can ever help you with anything, don't hesitate to reach out to us. You can find out all of our information, evernest.co. We'd love to talk to you.